Bitcoin, it's the daddy of the cryptocurrency world, the one that was there before Ripple, Litecoin, Peercoin, Dogecoin and all the others. But the world of cryptocurrencies is volatile, and Bitcoin's rise has been accompanied by ever-growing questions about its origins, regulation and stability. Today, Bitcoin remains the biggest online currency in the world, with both the trading price of its individual Bitcoins and the total worth of the currency as a whole remaining well in front of any other digital currency. But 2014 has already been a tough year for Bitcoin, and questions are now turning as to whether it is on a long-term downward spiral. Since the 1st of January, Bitcoin's trading price has been steadily declining and is now hovering at around $500 and falling. We took this screen grab at around 12 p.m. today, the 25th of February. Of course, this figure is still around $450 higher than that of any other digital currency, but it's still a long way down from Bitcoin's all-time high of $1,242 on the 29th of November 2013. And the fact that Bitcoin's showing a pattern of decline could be worrying too. Some of this can be attributed to the rise of other cryptocurrencies that have taken advantage of Bitcoin's open source technology, and some of it to bans on using the currency in China and Russia. Bitcoin's reputation also suffered a blow in January when Charlie Shrem, the CEO of Bitcoin exchanger BitInstant, was arrested and charged with money laundering, along with another man named Robert Fiala. The two men are accused of selling more than $1 million worth of Bitcoin to buyers and sellers of drugs on the online black markets Silk Road. To add to the PR nightmare, Shrem was also co-chairman of the Bitcoin Foundation that develops Bitcoin software and works to keep the currency respected and trusted, as well as to improve its reputation. Shrem stepped down from his position at the foundation shortly after, but now Bitcoin has run into an even bigger problem. Late last night, it emerged that Mt. Gox, once the world's largest Bitcoin exchange, had gone offline, with users unable to access any of their funds. This came just hours after a document was published online by the Bitcoin entrepreneur and blogger Ryan Selkis, revealing that Gox had lost about $350 million worth of Bitcoin following a years-long hacking effort that had gone unnoticed by the company. According to the document, which was apparently created by Gox itself, the hackers had taken advantage of a bug in the exchange's Bitcoin wallet software, effectively where Bitcoins were stored. Over a 2-year period, the hackers had even been able to gain access to so-called cold wallets, where Bitcoins were supposed to have been stored offline and out of reach from hackers. But Gox had been in hot water even before this most recent revelation came out. Back in 2013, US authorities seized $5 million of the company's assets for failing to operate in the US with the correct permits. And ever since then, customers had been reporting months-long delays in receiving cash for their Bitcoins. Things then came to a head earlier this month when Gox announced that it would temporarily be preventing customers from removing their Bitcoins from the exchange, and many investors braced themselves for bankruptcy. Then, the day before the blogger Ryan Selkis made his revelations, Gox's CEO, Mark Kapeles, followed in Charlie Shrem's footsteps in resigning from his board position at the Bitcoin Foundation. Here's Kapeles talking about Bitcoin back in April 2013.
Bitcoin would quite qualify as a high-risk investment. If you buy Bitcoin, you should buy with keeping in mind that the value could be zero the day after. For now, even if it shouldn't happen, there's still a chance it could happen. There's no guarantee, there's nothing behind Bitcoin trying to keep the market value high.
So what do you guys think? Is this the beginning of the end for Bitcoin? Well, as always, you can let us know your thoughts in the comments below, and we'll see you again next time.